Okay, today we have an article from the Motley Fool. Bill Gates has 79% of his $48 billion portfolio invested in just 4 stocks, which is true. I'm Hugh from Wall Street X, and at number 4, Bill Gates has Canadian National Railway stock that takes up 12% of his portfolio. The company is the largest rail network in Canada. It trades under the ticker CNI. They have consistently increased their dividend 20 consecutive years in a row. The 1 year return for the stock is about 11% in the downside. It has not been doing great. But that said, analysts have rated this a buy. Their target price is 18% higher than where it is today for this time next year. Pretty reasonable valuation and earnings growth given that valuation. So that's nice to see. Super strong dividend history. Their yield is 2.6% right now. We have also rated this a strong buy and put our target price at 14% higher for this next year. Mixed earnings surprise results. We got a beat, a miss, a beat, and then another recent miss. They have irreplaceable assets, which is a great thing for this company. Great growth potential given their their low PE. I think it's at 18. A pretty attractive valuation and a reliable dividend. And the risk is going to be low and the reward medium for this. We put this one again as a strong buy. Number 3, the third biggest stock in his portfolio, taking up 15%, is Waste Management, or WM. They have consistent cash flow and their dividend has been increased for 21 years running, currently yielding 1.5%. The 1 year return for WM is negative 3%. The analyst rating is a buy. Their target price is 13%, which is great. Pretty high PE, especially for something that is mostly a dividend play at 34, but their earnings growth is in the double digits, looking like 11% is the average. Good dividend. Again, we put this one as a hold just because our target price is a bit lower at 4.6% over the next 1 year. Mixed earnings surprises. We have 3 misses and a beat. The nice thing about WM is they have a defensive business and they have a strong market moat. They're very competitive in their space. They take up a lot of room and you just can't get rid of them. The consistent growth and dividends are also very nice, and they do have a lot of strategic investments, which is great to see, as well as strong margins. So we can see why Bill likes this one. Again, this is a low risk. We put this one as a low reward, but it could be like a low medium, depending on which analyst you ask. Again, something that you'll see in common between his top holdings. So we put this one again as a hold. The second largest stock in Bill Gates' portfolio right now is Berkshire Hathaway at 25%. It has outpaced the S&P over the last 5 years, according to this article. I haven't done any research, but that seems right to me. The Berkshire Hathaway shares have returned 6.4% over this past year. The analyst rating is still a buy, and they're looking at 3% returns over the next year. The PE is like 16. Earnings growth is pretty low, but that's kind of the story with this one, is low valuation, low growth, but steady and solid. No dividend that I can see. WSX rating is a buy, and we put our target price 8% higher over the next year. Again, strong fundamentals for this. Berkshire has very robust balance sheets, defensive and long-term value as well with this one. We put this one as a low-risk, medium reward stock, and we are a buy. And the largest stock in Bill Gates' portfolio right now is Microsoft at 27%. Obviously, he's the co-founder. He's betting big on AI, Microsoft anyways, and it does offer a sturdy dividend, something not a lot of people know about Microsoft, a very big dividend player. Their 1 year return has been 17%, which is great to see. The average analyst rating is a strong buy still. Their target price is 28%, is how high they think it's going to go over this next year. Pretty reasonable PE, especially given the growth. 35 at valuation. Earnings growth is like high teens. That's really good to see. We put this one as a buy as well, and we're anticipating an 11% upside over this next year. Strong financials and really solid investments with Microsoft. They're very smart over there, and a ton of analyst confidence. People love Microsoft, and that definitely plays a part, even though in theory it shouldn't. The risk for this is low. The reward is medium. That's going to make Bill Gates' top stock in his portfolio, and those are his top for holdings right now. You can visit wallstreetexec.com for more content and ratings. Otherwise, thank you guys for watching.